All right, everybody, let's go ahead and see and make sure we have a good mic check. Good. So I'm putting this on here live so that it's already on YouTube. But this is for, your viewing whenever you want to watch it. I say just take a look at it before the market opens tomorrow. This is what I call the broad market analysis. We'll be going over the SPY, the Qs, so ES futures, the dollar, the skew, and overall my sentiment, and just kind of putting that in together for the week ahead, especially with earnings coming up. So let's go ahead and get started. So a couple things I'll show you. SPY, we'll be using TradingView plus Thinkorswim here. All right, so just give me 1 second. We'll bring all this over to you guys. All right, let's go ahead and start over here on the bigger picture. I'm going to start with the SPY. Okay. And I want to be looking at a monthly chart. And the reason why I say this is because the overall market, is definitely surprising people week to week. But I feel like there is a theme here with the bigger picture, and I'll go over that with you. All right, so the first thing, again, this is a monthly chart. A couple things I want to show you what's going on is that we had this big pullback. It was pretty straightforward. It came into what I consider a double inside and up. You could see that we had buying pressure here back in November 2020. We then pushed up all the way up into 3 January 2022. We created a smaller time frame inside and down here. Well, sorry, higher time frame. I think that's a quarterly. Yeah, a quarterly inside and down. Okay. And I wanted to be looking for the inside and up on the quarterly, and we could see that it's down here. The initial move. Okay, so for supply and demand traders, you have demand down here at around 307, and we created supply up here around 446. Again, a lot bigger picture. Moving over into the monthly, because not everybody can just trade off a quarterly, we have to break down those time frames. So on the monthly, we found that price came into this double inside and up. Prices push from there. Now, what I call this is a relief rally zone. Very important for you to understand that. Typically, what's happening here is between supply and demand, you get what's called a relief rally. Just from a Fibonacci standpoint, folks, you can find this typically around the 50 and 618 of fib levels. Okay, so even if you're not too sure about your zone structures of how you find them, if you know how to find a rally, you could typically find this relief rally around the 50 and 618. Okay, notice that the relief rally so far is working pretty well. All right, now price, if I were to measure from this pivot low into this pivot high, I want to know where the 38.2 is. Okay, and roughly it's right there where we have it on the chart, and you can see I'm coming up from the pivot low to the pivot high. This is a very important level for me here at Trendy Trading. This is part of my methodology, and basically looking back since the inception of the market, what I find is that when price is able to reclaim this level, it is bullish. So for me going into this week into earnings, this level is kind of my line in the sand from tonight all the way into Friday. So that 0.382 is roughly around 390.12. The exact number may be around 390.15, but again, that's my line in the sand. As we approach all these earnings, and we have some big names coming up this week, I don't expect that much of a pullback. I really don't. So we had a nice pullback on Friday, and I'll show you guys that here in a second, but it was just an inside day. And after a big rally, I kind of feel like, that's pretty normal. We're just digesting that move. Normal is not the same as normal 1 year ago. And so what I mean by that is like a 100-point swing in the ES futures is becoming kind of the norm during this volatility. So on Friday, we had about 60 points or so to the downside, had a nice little bounce towards the end of the day. So again, feels pretty normal. Now, what I want to show you here on the monthly is that we are going inside so far. All right. Now, again, the end of the month, you could see we have all the way until Monday, or we could say Sunday. So right now, the current candle is inside, and I love that because that's going to set us up most likely for either an inside and up or inside and down formation. And I really love to trade off of those. And again, guys, my videos are out here right on YouTube to understand how to find those inside and up and inside and down formations. Okay. Next thing I want to be looking for are things that are above me that could stall price or things that are below us that would support price going into this earnings session that we have coming up this week. All right. So some of those things that I'm looking at, I'm going to take you into a smaller time frame. Okay, are going to be the cloud, the EMA cloud. When we're underneath it, it becomes resistance until proven otherwise. Proven otherwise would be when we can break over this cloud, create formation, and make higher highs off of it. Notice here, we pushed up back in March. It was a nice little push, but we came very close to the trendy edge. Again, this level right here is identifying supply. All right, and this area down here is identifying support or demand. Okay, so we found our demand, we have our supply, and everything between is a roadmap of how we get there. So if we continue to move up here, notice on the daily, or sorry, on the weekly, my apologies, that we have an inside and down formation. I'm going to draw a couple things out for you just so you could see those. Right here, we have that inside and down. So this can definitely be a big stop for the bullish run if we continue up. So please take some caution up here if indeed we start to move towards 406 into around 411. All right, very important. 406 to 411, you can see some resistance in that area. As far as support is concerned, notice that we have went inside and up, okay? Inside and up, and the weekly has come down plenty of times right into the lower trendy edge here, this blue level. And basically what this looks like to me is that we're trying to create some sort of base. And if we could pick up and go from there, again, I do believe we travel into the inside and down. Now I'm going to show you the QQQ and show you how the Qs were leading into this zone, and that's why they pulled back. All right, so I'll show you that here just in a few minutes. Now before we move on, let's come over here into SPYs. All right, and you guys know that I like to do what's called the neutral strategy. So we'll go over the bigger picture, which I just did with you, and then we'll go over the smaller picture for just this week. Okay. All right. So on the left-hand side, we have a weekly, and on the right-hand side, we have a daily. On the weekly, this is my neutral strategy. Basically, over the green, I'm looking to go long. Underneath the red, I'm looking to go short. Now, my overall sentiment going into this week, we had a nice inside day last week, and if we have a continuation down, I'll be looking for support as we get ready for big earnings such as Apple. Okay. Now, up above, I went ahead and annotated that supply zone or that inside and down. And down here below, I have annotated some demand. Now, I will tell you, okay, please understand that this demand or this zone right here has not really been given the opportunity to create a stronger demand zone. So just be cautious. Even if we come in here, we may dig a little bit deeper before finding support. Okay. But for now, any line above the neutral is going to be resistance until proven otherwise, and any line below the neutral is going to be support. Once again, I find this on lower time frames using supply and demand and Fibonacci levels. Okay, these are your two opposing zones, and right now we're just kind of stuck on lower of the curve. A lot of people ask me, what does that mean? When we just look at this, if you were to take supply and call this higher on the curve and call demand lower on the curve, we are lower towards the curve, and this is where I want to be thinking about buying. Okay. Over here on the right hand side, notice once again that we are over the cloud. We have went from red to white to green on momentum, and it looks like we could indeed, if we go bid above the green, we should be able to push up here towards the 397.90 level. And then I went ahead and used this top of Friday's candle as a target as well, because we need to build value above that. Once we do that, notice we have a little bit of a gap fill over here, 401.45 or so. And then above that, I do have some more targets for you. Notice that the ATR going into this week. Weekly ATR on the SPY, again, this is just an average trading range, is about $19 per week. Okay. And then here on the daily, you can also see what the daily ATR is, around 7.9. So the volatility is still pretty high, folks. Okay. We're still getting nice moves. My overall sentiment, I'm actually bullish. Friday was a nice inside day. If we gap down, I'll be looking for support in any level that's below price. Okay. And the reason why I think that is because we are coming into some big names. So we could still pull back, but there is a high chance that we could just kind of go sideways until the market gets those forecasts from these big companies and we get some data out of that. We also have FOMC coming into this week, so it's going to be volatile. It's going to be fun. And in my opinion, these are the two major zones that we could see this week, supply and demand on the SPYs. Okay. Let's go ahead and move back over here and bring up the QQQ. And just like I was showing you, let's start with the quarterly. This is our quarterly candles, okay? And again, inside and down, and this was a nice precursor. This was like we already felt as when we went inside during January that this was not going to be a good year for the bulls, because once we went down, we were looking for things to the left, and you could see we came right into the 618 of the overall pivot low and pivot high of the same time frame that I was using on the SPY. And again, that is basically March, April time frame all the way up into October 2021. So notice how important those Fibonacci's are. You just got to understand where to place those fibs during this range. And so far, it's working out very nicely. Let's go ahead and go into the monthly. What does that look like? Guess what? Looks just like the SPY, pretty much double inside and up. We found value there. We broke above the 618. Now we're above the 50. Unlike the SPY, okay? Unlike the SPY, the Qs pulled back a little bit deeper this year, right? And so they had to pull a little bit deeper, but just like the SPY, they both came into zones, okay? Both came into zones, and again, that is that relief rally zone that I was just telling you guys about. And so you could see that there's a lot of similarities there between the SPY and the Q as far as formation and Fibonacci. Okay, so what are we looking for going into this week? So the biggest line in the sand for the week for me is going to be the 50. Remember, over on the SPY, it was the 38.2. So the 50 is at around 295, folks. That's my line in the sand for the week. If we break down below that, then I want to refer to the neutral strategy, and I'll show you that here in a second. To the upside, we have some trendy edges here, and we'll go to a smaller time frame so you can see that. All right, and notice we call this a double stack. So we have two supply zones basically sitting on each other from different time frames. So these tend to be basically a big wall, okay, a big wall of sellers. But you can also see on the week, a lot like the SPY, we have this inside and down right here formation. So for my supply and demand traders, this is pretty straightforward. Price pushed up into this level. I have the trendy edges. They make it easier for me. So I get questions about my indicators. The reason why I came up with the indicators is so that I don't have to go back and look at formations, but I don't mind teaching them, but just understand that for me, it's a lot easier just to look at these lines that are on my chart, okay? Anyways, this is definitely a big level. So you have two opposing big levels, okay? You have the 50, all right, that we just talked about, around 295. And then you have these levels up here, which are around 309, 309.44 by 310.02. So that area in the 50 is basically like a neutral. It really is. At the end of the day, not much is going to happen from here. Now, again, on the SPYs, if you go back and look, this inside and down is not touched yet, and we have not moved into it. But notice how the Qs were leading the way, right? They led the way to the downside, and then they started to lead the way to the upside. But the issue was price moved straight into a supply zone and then pulled back. All right, and so you had tech pulling back. You had SPY basically kind of sideways to down, but this was, again, the canary in the coal mine, if you will. Okay, so big levels for this week, folks, 295 by this 310 up here. Between there, I know it's wide. I understand that this is a wide level, but it makes sense to me coming into big earnings, especially with Apple on tap. Okay. Let's go over here and check out Thinkorswim really quick. We're going to pull up the Qs. All right, and once again, we're going to have neutral strategy here. All right, this is your weekly on your left-hand side. Now, if you wanted to, I could put this on here, but since we've already hit it, I did not put in the boxes themselves. But there you can see we hit supply. Okay, and just like SPY, we're actually creating some demand down here. I see buyer pressure coming in, my zone would look a little bit different than what you guys are used to here. I'm not going to come all the way down to this pivot low, but just right underneath using this wick and underneath the pressure of this buying candle here. So this entire three targets to the downside are basically within a demand zone, if you will. Okay. But again, don't forget the move out of here. I'd much rather see more candles form to the upside to create what I would consider a stronger demand zone. Okay. Just as a disclaimer. So if price pulls back, like I said, it could dig a little deeper than what we're expecting. Okay. All right, so QQQ, you can see the levels. Again, same thing. If we break out of the green, I'm looking to go long into these upper targets. And if we break down below the red, I look to go short into these targets. Now, I don't have to necessarily go short. If things feel like we're coming into support, then I'll be looking at buying down here. All right, so I always tell everybody before we move on, let me just show you this. If we were to gap up for any reason into one of my targets, I'm cautious on the long side. I have to wait for my signals to line up, whether it's buy and sell signals. I'm also looking at the TTM squeeze, making sure we're starting to get a squeeze and that we're starting to see some compression. Then I'll look to go long. But just be cautious if you open up on one of these top levels. And the reverse on the downside, if we were to break down into a lower level, say any of these, okay, I would be cautious on the move down, right? For me, you don't want to be buying puts on the market down, right? You want to be buying puts when things are pushing into supply, pushing into the cloud, pushing into the edges, and so forth. Buying calls, I like them better when we're coming down into demand, into support, so forth, okay? All right. Over here on the daily, let's go ahead and take a closer look. You can also see on the daily we had a lot of selling pressure here. And again, this transforms, just so everybody knows, this is a weekly supply zone, but this transforms and looks like this on the daily. There's a lot of clusters in here, and then basically we have this big sell-off, and because of that, you can see there's selling pressure in here. This is just a closer look for you to understand what's going on. These targets to the upside are also within a supply zone, and these targets down here are within a demand zone. It looks pretty tight. My overall sentiment going into the Qs, sideways, okay, just sideways until we start to see some earnings, and then we'll kind of go from there. All right. All right, folks, so that's the SPY and the QQQ. Let me go ahead and talk about the next things that I'd like to cover, and that is going to be, give me 1 second here, we're going to go into let's go to broad market here. And let's go into the dollar. Okay. All right. So DXY, again, the dollar. And what I'm looking for here, I've been talking, we update on this every week. All right. And this is really important. So basically, if you see strength in the dollar, you want to be cautious, right? We started to notice on the dollar that on a smaller time frame, we started to get topping wicks, okay? And that was like the pre, right? You see it happening, so you hurry up and roll over into the equity market, and you're looking for buy signals, you're looking for demand levels and so forth. And then we were able to ride that wave really well. Now, last week was a lot harder because of certain circumstances that happened in the market. They kind of gave us a few good days and then they pulled and things were kind of slow and sideways to down. So it ended up being a little bit difficult, but not too difficult. And what I'm looking for coming into this week is still, even though we got the topping wick on the dollar, it's not over yet. You still have to be cautious. In my opinion, what I'm looking for, okay, and I'll read this to you. The topping wick could be a sign of the dollar stalling. I updated this last week and said, hey, the dollar did stall. I'm still cautious though in my bigger account. So here I trade with two different accounts. I have a cash account and a margin account. And in my margin account, I'm currently and have 3 positions, folks. 3 positions, that's it. And then I have a hedge on top of that, okay? I'm comfortable adding to the long side or the net long side if the dollar starts to drop below 103.88. Now, if you notice over here, it's still sitting at 106. And just like any other stock, this was resistance and then we picked up and then we pulled back. And the question here, does this supply zone right here, folks, let me go ahead and zoom in. Does this supply zone become support? I really hope it doesn't. All right, so basically what I'm looking at is this yellow line here, and I'm wondering, if we were bullish, we'd be thinking to ourselves, hey, resistance turns into support, right? In this case, I want to see it break down below it. I want to see it start to pull back all the way into and underneath this 103 and some change, and then possibly revert back to the cloud here on the monthly. Okay. As far as the weekly is concerned, you can see, we pull back, but we have support right at this cloud, folks. So just be careful. Basically, if you're watching the dollar and it starts to bid up again, be careful. Look for it to stall maybe around 108.44. If it breaks down, okay, just like I was showing you on the neutral strategy, if the dollar breaks down, becomes right into this cloud and my trendy edge, we could see a pretty nice bounce here. So again, these things need to line up. I need the dollar to break down through the cloud and start to move down towards these levels down here before I feel, I guess, safe on overexposure to the net long side. Okay. So again, my account, my margin account, I'm staying cash at around 95%, folks. That is kind of the norm for me. So I'm only trading with about 5% of my net liquidity in that account. All right. All right, let's go ahead and move on. So the next one we are going to be looking at is going to be the TNX. All right. Now here, what I like to see is for it to settle down, especially for bigger beta names. And it's doing that. It's stalled where we thought it would. And if we look over here on the monthly, this right here, we were looking for a stall. It kind of blew right through it, but then came right back down. Let me just check something on the quarterly. Yeah, so on the monthly is what we were looking at. So things look okay there. It looks like it could also revert back to the cloud here, just like the dollar. So there is a possibility if we take out the 2.7 area that you could see this pull back to about 2.5 to 2.463. Okay, so again, that's TNX, that's the 10-year treasury. And you can see right here, inside and up and near the back of the sell zone, up and over, be careful. If the treasury is greater than or equal to 2.88, stay cautious. And again, it's around 2.78. Update looks like a possible pullback to the 2.447 or sideways action. Okay. Moving on, let's go ahead and talk about the skew. So again, I say this always, if you don't know what the skew is, please Google it. But basically, it's your hedge funds and how they're positioned, how they're looking at the market, the overall market. This data that's on here has worked for so long. But here over the last 2 years, I have to admit that the skew kind of held up here for a long portion of 2021, which told me to be careful. And, we just kept melting up. So it's very difficult to get, like, I guess, to be like 10% cash and be overexposed, I thought, during this period because there were a lot of signals saying that the market would pull back, and come to find out, they basically did that the whole entire year. And then right towards 2022, as after we opened, then that all kind came to, right in front of your face. It's like, okay, well, everything I was waiting for didn't happen, but it did right after January. So just interesting. So what I'm getting at is this year we are down here towards the risk on area. So if you were to go back and look at the data, you would find that if you put a SPY chart behind here, typically in this area, you would start seeing SPY push up within like 6 to 12 weeks, and we would get like a huge rally going. But guess what? It's 2022, and we've literally been sitting down here, folks, for 2.5 months, and the rallies are short. Okay. So I'm not saying that the risk on area is not working. It's just that it's only working for a couple days at a time. And at sometimes it's only working for like a day or two. All right. So just again, the skew is just one tool that I'm using with everything that I'm showing you. And at the end of this, I give you my overall sentiment of how I feel about the entire market. Okay. All right, so skew again, you can see is coming in at around 119. It's basically saying risk on, but again, all factors need to line up. I'm still cautious, like I said, because of the things that I'm already showing you, that the SPY is getting closer to the supply zone, The Qs have hit the supply zone. Our looking at TNX, it's not quite pulled back as much as I wanted to. The dollar hasn't pulled back as quite as much as I wanted to. They both look like they're coming into support. So therefore, although it says risk on, I am still super cautious coming into the market and playing from a day-to-day perspective. Okay. I do have some longer term leap positions on, but not, far as like, a couple weeks out. I only, like I said, in this account itself, I only have three positions on and a hedge. Okay. Let's go ahead and move on. As far as the fear and greed is concerned, you can see if we come over here and take a look at that right here. This is your fear and greed. This is pretty straightforward. What's interesting is it actually ticked up. I want to say that it was like right around here or in here, and it's ticked up now. It's still in the fear zone, meaning that most participants that are in the market are probably and most likely on the put side. All right. Now, the way that we look at this is when we get to extreme fear, and the participants are primarily on the put side, we're looking for the market to basically reverse and throw that in the bear's face, right? Just like if we were extremely greedy, we're looking for, some kind of rug pull there. All right. So we're kind of stuck in the middle. And that kind of sums up the entire year so far. We're stuck in the middle. And so we're only getting a little bit of this, a little bit of that, and there's no follow through, which makes the market very difficult to navigate. And that's why you're starting to see so many traders resort to scalp trading. And so if you have some sort of process that you like to use there, that's great. If you don't, we teach a process here at Trendy Trading as well for scalp trading. Now, me primarily, I don't like to scalp trade all the time. So you'll see me put a lot of trades on for 1 to 3 days. Something that I like to sit on just a little bit more than 3 to 5 minutes. So just something to think about. But I want to show you a couple things moving forward. Let's go into ES futures. Let's go to ES futures. Now I trade a lot of my stuff off the ES futures chart. Okay. And I want to show you kind of how I break it down. All right. And so we'll put on ES. Remember, about every 10 points in the ES equals about $1 in the SPY. All right. So if I'm saying, hey, I like this up into this mark and it's 20 points, well, I'm looking for a $2 move in the SPY. Okay. Now I want to go over this with you. I don't typically do this on a public forum, but I'm going to do it today. And so this is ES Futures. This is the weekly. This is going to look a lot like the SPY, and I just want to go over a couple things with you, what I'm looking at. And quite frankly, this is how I review any of my trades. I like to work from a weekly to a daily to a 4 hour, and then if I like everything, I'll typically enter on a 5 minute over one of my levels. Okay. But all of this I take into consideration. So the weekly, I want to point out a couple things. This is my long-term support. This is what we call a trendy edge. The blue ones are higher time frame for swings and leaps. So I want to be going long at the bottom and looking to trim through the mids and the upper portion of the supply zone. Now, notice on the weekly, just like the SPY, we have an inside and down. Notice here I said weekly supply zone. And here, inside the cloud, a plus for the bulls. Now, why am I saying that? Well, because we haven't rejected and pulled under yet. Okay, so it's a plus that we're holding above there. The next thing, notice that the TTM squeeze right here is yellow so far, and I did not spell this right. Ceiling. Ceiling. Okay. So far, selling pressure is easing just a tad. I mean, it's one yellow bar, folks. Don't get too excited. But I just want to note that. All right. The next thing is we are creating an inside and up formation as well. Well, actually, we did create an inside and up. So now we have two opposing inside and up and inside and down formations. That's good. I like that. All right. All right. Let's go ahead and move on to the daily chart. And give me 1 second here. They've been doing that a lot lately, where TOS like expires like I'm using it. I don't know why you know, why you froze up my screen here. Let's see. Mm, doesn't look like. All right, let's just go. Oh, there it goes. Okay, good, good. Sorry about that, folks. Out of my control. So let's go to auto, pull up the daily. Let's make sure we're on the day. Notice that I saved these. They say week, day, 4 hour, and so forth. Just want to kind of show you what I'm looking at. All right, so on the daily, we went over these last week. So this was your supply zone. We had tested this supply zone twice. We talked about if the market tests this more than twice, then we could see a push through this on the third attempt here. And that's exactly what we got. Right here, I want to point out that we did create an inside and up formation. I want to also show you that we have cloud support now, so we're above that cloud. I also want to annotate this green dotted line. If you follow this across, this was the top of the supply zone. So the idea here is, does the supply zone, basically turn into a demand zone? In order for that to happen, what you would have to see is, prices are kind of messing around here. We start to round out around this area, and then we'll create a formation above here, all right, and create that demand zone, the next demand zone on top of the previous supply. Okay, so the question is the older supply now support, question mark? Inside day, I said that's healthy. I just want to point that out. And then right here, weekly edge resistance until it's not. So our trendy edges identify and supply. Basically, this is resistance until proven otherwise. Let's go ahead and move into the next chart. This is going to be the 4 hour. This is basically my trading chart for tonight. This is what I'm looking for. Okay, so we have 30-minute zones. I went to different time frames. I went ahead and labeled it tonight just for you guys so you can kind of see what I'm looking at. This is a 1 hour zone down here. We have some trendy edges. Let's just follow these levels here. So we came into a little bit of support on Friday's close. Even though I put a hedge in here, I did tell you guys that my idea was that, the market had a nice pullback. It was a healthy pullback. And with as much as tech got wrecked on Friday and the day before off of that Snap earnings, they say Snap earnings, but what I will tell you is the supply zone on the Qs was there before the Snap earnings. Again, I think that any kind of information like that is just a catalyst to move price from a supply zone. So that's what happened in my mind. It's not about Snap. I don't think that Snap snapped the market. Like that's insane. It's asinine to me. Okay. So we came into a little bit of support here. We have resistance above 3973. If we dip a little bit deeper in here, I would expect buyers on one of these lines here. This is my trendy edge at 39.14. I would definitely, for myself, be looking to go long if we reclaim this level. And if for some reason we break down, folks, that means that the 4 hour cloud is broken. That means this trend is broken. It means most likely we're headed back to 38.72. Okay. But as long as this cloud is holding, we're inside of it. I do believe all this area could be support, and we'll work our way back up towards that 4,000 level and towards those trendy edges. Okay. So overall, I went over with you guys a lot of different things here, and my overall sentiment, because we have earnings coming up, okay, and because we had that nice pullback on Friday, and I feel the bigger names are reporting, I do feel as if we could just basically chop around. Because of that, it may not be as exciting as we want it to be. It's basically hurry up and wait. Hurry up to the market. I know you want to see something different, but guess what? We have a lot of earnings on top, guys. Me personally, I like to use Earning Whispers, which is on Twitter. Check them out. They have, their calendar out there. It's always been pretty accurate. And that's what I rely on for as earnings go. And there are quite a few coming up this week. So, anyways, be ready for a big week. Be ready to execute, but also be ready to think in your mind that if we get some kind of bounce, most likely until we start to work through those weekly zones, it's not going to be easy. Okay, maybe a lot of credit spread selling this week, but for the most part, my overall sentiment, guys, is sideways. And I typically would say sideways to down or sideways to up, but I literally feel like it could be pretty choppy into FOMC as well. So it might be, hey, we're waiting on earnings, but then FOMC brings a whole different light to the situation. So there's going to be a lot of noise. And when I say noise, I'm talking about news, I'm talking about friends, I'm talking about anyone out there that's trying to give an opinion. So just try your hardest to stick to levels, okay? Try to stick to levels. Have a process around levels. If you're with Trendy Trading, you guys know I have a pretty defined process. I feel very confident. A couple things I want to lead you with. I just sent out something on Mark Douglas, and I want to read this to you guys really quick. I put this over here in the Trendy Trading room, and I said things for you guys to think about today. Professional traders don't enter trades without predefined risk, period. Okay, I'm not saying that they didn't used to do this or that we didn't all come from the same tracks, but most of us did, right? But you learn to evolve. And in order to trade from a carefree state, or honestly, just to feel a little bit more at ease, you have to predefine your risk. If you do not know how to do that, if you're trading and you're not using a predefined risk, come check us out. Let me teach you at least what I do to kind of help ease that anxiety and or to get over your fear of losing. Okay. Not saying you won't lose. We will definitely lose, but I want to teach you how to feel more confident about taking a trade based on what you already understand can happen. Okay. The second thing is typical trading errors that Mark Douglas points out that professionals have evolved beyond are one, again, they don't define the risk. Two, they define the risk, but they don't take the loss and it turns into a bigger loss. And most of us have been there and continue to be there. Traders hesitate getting in too late, right? For example, here at Trendy Trading, I said, price hasn't gone over the PMZ yet, or it does go over the PMZ. My bad. So we go over the PMZ, the pre-market zone, but you hesitate. And the reason why a lot of us hesitate is because you're thinking too hard, right? You assume, you think, or you believe you know what will happen, so you hesitate. Like if you already defined your edge, which we literally have things called trendy edges. If we've already defined it and we've already defined our risk, what are you waiting for, right? What are you waiting for? The second thing or the third thing here is going to be jumping the gun, getting in too soon when the signal never develops. Example would be like prices in the pre-market zone, but it hasn't broken out of either side of the pre-market zone, but you're taking the trade in the idea that you think it's going to move in your direction. Once again, overthinking things, okay? Not waiting for the signal to actually show you what you need to do there, right? Getting out too soon, this is something we all deal with and will continue to deal with, but it comes back to the same exact thing. You're overthinking. You think that something's going to happen, so you jump out of the trade itself, okay? Now, these same errors can also result in a positive trade, which is very interesting. So everything I just said, you could do the reverse. You could absolutely, jump the gun early. You could hesitate, and all these things could work out in your favor. But the issue with it is that indulging in this behavior can be catastrophic to a loss. Okay. The idea is that you're breaking your rules. It worked Monday through Friday. So next Monday, you're like, you know what? I don't have to follow any rules. And then you put everything you have into a trade. You try to break the same rules. The catastrophic loss leads to a blown account, and then you're done trading. Folks, if anything I could tell you before we end this session is please just follow your process. We are human. We will break it sometimes, but don't get in the habit of not using a process, not using a defined risk. If you do, your trading journey will probably end pretty fast, okay? If you guys have any questions, please reach out to me at trendytrading.co. I'm also on Twitter at trendyjon, TR3NDYJON. And least but not last, please give me a like. Please, take the time on Twitter to like and to retweet and to give those positive vibes. I can't wait to trade with you guys next week. I appreciate it, and I'll see you soon. Bye bye.